Good morning, this is Nigel Croft and this is TA for Traders and it's Thursday the 9th of March. In this short video I'll be looking at 5 UK stocks. I'll be looking at Smiths Group, Acacia Mining, Direct Line Insurance, Glencore and Centrica. So let's go straight on and look at Smiths Group. And you can see that yesterday there was an attempt to move into new high ground after we bounced off the 50-day and went through the resistance that was of the 20-day. 20-day now giving support. I would expect a further move forward in this share. The RSI has moved up very well, back above the 50, broken its own downtrend, indicative of positive momentum, and the MACD has just turned as well. You could even say there's a very short-term reverse head and shoulders, which will be confirmed with a break above yesterday's high, and there should be then a good quick move upwards. On the longer-term picture, again, it's positive. The consolidation that we had in December brought the stock back to the 20-week moving average, and then we had the trampoline effect from there. We've now had a consolidation sideways, tested the downside, buyers came in, it's going to move to the upside. The RSI is above 50, which is good. If there was a break, that would also break its own little downtrend that it's in and would be positive. MACD would then also roll around. At the moment they're just indicating on a weekly no positive momentum, as we saw on the daily, which I'll just quickly move back to. It very positive that the short term has moved above the longer term on the MACD, and that the RSI is ticking back up to the 60 level. On the support resistance levels on Smiths Group, there's support at the 20-day 1523 and the 50-day 1502, and then the immediate short-term resistances are seen at 1551, 1555. Above there we're in blue sky, and you would expect a further move upwards. Moving on to Acacia Mining, Jefferies lowered their forecast on this stock at the start of the week, which brought the shares dramatically down. The 50-day is giving support. We are below it, but it's still tracking upwards, so is still a positive influence on the market, and it does seem that the market wants to get back above there. If we do get above there, then the 200-day will come into play, and also the resistance that we had back in February will come into play. But as a general picture, I would say, we went very oversold on the sell-off. Yes, the MACD are negative, but in the short term, I'd expect a further push up. It may even fill the gap, which would take it, the gap that was left on that bullish run, which would take it at about up to the 480 level. On the longer term picture, again, you can see that gap there. There's a gap on the weekly that could be filled. Finding support on the 50-week moving average. MACD not quite as negative yet on the weekly. So in the short term, I'd expect a bit more upside there. On the support resistances, resistance at 470.8, which would fill the gap. Supports at 399.6 and then down at 382. Direct Line Insurance was affected last week by the announcement by the government on compensation payments by insurance companies, and even though there was a short-term recovery, is now showing selling pressure coming in. realistically, I would expect the lower price that we saw last week to be tested, for that support to be tested. The RSI is negative and the MACD look negative as well. If there were any upside, we've got the downtrend in moving averages. They are a negative influence on this market. As you saw, we've had the 20-day cross through the 50-day, both moving downwards, which is a death cross, and so they're very negative, and I would expect a push down into to test that support. On the weekly, again, we've moved below the moving averages, which are tracking down the 20 and the 50 week. You could potentially draw a trend line, a downtrend, and we probably will go to the lower boundary of that downtrend, which would be in the low 300s. Looking at the support resistance levels, support at that low that we saw at 328.4, no support below there, and on the upside we've got resistance at 348, and then at the 20-day moving average at 352. Glencore. I've drawn this trend line, parallel lines on the share, and you can see, I mean, this uptrend started back in September and has seen the shares appreciate from the 180 level all the way up to just above the 340. This trend has now been broken. We've got the moving averages rolling over, the 20-day already moving downwards. We've had warning signs from the RSI starting in January. That's now confirmed to the downside. The MACD, which had been warning as well, are breaking down again. This share is probably going to go below the £3 and test the lower supports. On the longer term picture, you can see the uptrend that's now been broken. The initial support comes in at the 20-week moving average, 293.78. Again, you can see the picture, strong uptrend, now broken to the downside. You would expect, as I said, a move below the £3 level. On the support resistances, resistance at that downtrending 20-day, 326.02, and then at 343, with the supports at 302.75 and 260.5. Moving on to the last share in this video, and that is Centrica, and it's finding support from the 200-week moving average, which is a good sign. If this support doesn't hold, there will be downside pressure, and other indicators are telling us that will happen. We've got the 20-day just about to move below the 50-day moving average. We've got the RSI below 50, also indicative of negative momentum, and we've got the MACD both tracking downwards. That support is vulnerable. If it breaks, we'll see further downside. On the weekly, you can see this picture. Long-term downtrend. We're talking from September 13 all the way right through to February last year. Now we've had a slight improvement, a slight consolidation. Is it base building? Too early to tell. But even if it is a long-term base building pattern and we're going to get a basin at the bottom, the low here could nearly be tested. So even if we come back to the 208, 205 level, that would still keep the long-term picture reasonably okay. But obviously we're talking short-term here. What do you do? Well, if the 200-day breaks, expect further downside. Even on this weekly, the RSI is tracking back down. It's just gone below 50 at 49.46, indicative of negative momentum, and the MACD are rolling. Also of interest on this weekly is that we're at the immediate support of the 20 and the 50. They're both moving together. When that happens, you do expect a bit of an explosive move. So I would expect a move possibly to the downside if that 200-day doesn't hold. On the supports resistances, the support is at that 200-day. As I said, it's very close to where we are, 223.06 and then 205.5, and there's resistance at 227.7, and then at the down tracking 20-day at 229.41. Thank you for watching this video from TA for Traders. I'll be back tomorrow when we'll be doing a video on the soft commodities. Thank you very much for watching. Please do remember that these videos are just my opinions and that they're for educational purposes only and are not investment recommendations. And please do read the disclaimer video which I'm about to put on the screen. Thank you very much.